Anshuman, so first things first, please help us understand this complicated world of high frequency trading.
Most of the software which would be good enough, say in milliseconds, will not be good in microseconds, right?
Oh, yes.
If you have zero risk, you shouldn't get any reward. So not everybody can play on that level, right?
Finding their synergy is to ensure that the clients trade seamlessly.
Yes. In HFT, everybody is in an arms race. How quickly they can just shave off that microsecond rule.
Yeah.
You can't make a dent with a Diwali rocket. Any and every algo strategy also has a market in the market has a shelf life.
Namaskar, everyone. Welcome to Bold by BlinkX, our weekly podcast. Today we have a special guest, Mr. Anshuman Das. Anshuman doesn't need any introduction. He's a tech leader. He's behind the high-powered systems that one typically sees in capital markets, more so intermediaries like brokers. And today we are going to discuss with Anshuman all those so-called complicated topics and figure out if it can be explained in a simple and lucid manner to our audience. Thank you so much, Anshuman, for being part of Bold by BlinkX. We are really thankful to you for having taken time to come to this show.
Thanks for inviting me, Kalyan. Hi, everybody.
Anshuman, so first things first, please help us understand this complicated world of high frequency trading.
So, lot of people might not know, but when the first high frequency traders came to India, it was basically me being part of City and bringing them to India in 2009. And players like Optiva, IMC, etc. started trading in India. So, high frequency trading generally is a special kind of trading wherein systems trade directly in the exchanges within the exchange location. So this is called co-location.
Co-location, yeah.
Right? And somewhere around 2008-9, NSE started co-location. Right? That's when people started taking interest.
Okay.
Right? And the idea is that when you are your trading speed goes into the realm of microseconds, now even nanoseconds, the distance between where your servers are and how far is the exchange matters a lot, because the speed of light is what it is, and multiplied by the distance, etc. Right? So that's the time that becomes very important. Also, the systems need to be in the same network as the exchange, okay, to reduce a few hops. Right?
Okay.
So those are the things that started more than a decade back, right? And what happens is then a lot of people start investing in the racks. Those are quite costly in itself, and then also technology, right? So if you have to leverage that speed, right, most of the software which would be good enough, say in milliseconds, will not be good in microseconds, right?
Oh, yes.
There's 1,000 times difference there, right? The whole idea is that how quickly would you receive a tick and act on it and then place an order to the exchanges, right?
Okay.
Now there are different type of tradings, right? If you are taking a bet on, say, some stock will be X price at some later date, that's not very low latency, or doesn't need low latency, because you are taking certain risks that, okay, till that time the stock is in your books, and
It's a far bet.
yeah, far bet, right? Whereas when we talk about high frequency traders, what generally happens is they will not keep any position at the end of the day.
True.
They would basically trade where they find arbitrage, right?
True.
So in general, free market economics suggests that there is no arbitrage opportunity. but in reality, the stock market has arbitrages, and the arbitrages actually are the agents who are reducing those arbitrage opportunities to make free market possible. True, right? So they do play a very important role. Absolutely. To get that arbitrage, and what do you mean by arbitrage? It's where you have zero risk, right? So zero financial risk. Now, you cannot get anything for free. In markets, the entire thing is all about how much risk you take and hence the reward, right? So if you have zero risk, you shouldn't get any reward, right? Uh, but as I mentioned, arbitrages do take zero financial risk, right? But they, on the other hand, invest a lot in technology, and there's another type of risk called technology risk, right?
Correct.
So these two things taken together, they are reaping certain rewards, right? Which not necessarily everybody else can, right? The input to get those rewards is very, very high, right?
Correct.
So to give you a understanding of what I am talking about, the spreads is like in basis points, right? Very small spreads, right? If you were to even find those, and if you were to invest, say, 1 lakh rupees, the return would be very small, right? Correct. So if you were to really take advantage of those small spreads, you will have to put hundred or thousands of crores through first, right?
High volume material market.
Yeah. So the input is not only just technology, it is the capital, right? And then hence there is a cost of that capital.
Okay.
So not everybody can play on that level, right? So the institutions play where they can get thousands of crores to bet on the market at cheaper price and use technology to very quickly send orders, very fast. True. Send a lot of orders with small spreads, right? That's called high frequency trading.
So if I understand it right, you're saying for having a high frequency desk, deep understanding of the market, spreads, and more importantly, deep pockets and understanding of technology are an absolute must. Yeah, that's how I. Okay, awesome. Uh, Simple thing is, given so many trades get processed at the broker's level, at the exchange level, typically, how does a broker exchange system kind of talk to each other? Is it as seamless as you and I are talking right now?
Yeah. At one point, the trading used to happen through just call out, right? True. When NSE came in, they brought in what was called CTCL, computer to computer language.
Yeah.
Right. That's when the machines started to talk to each other.
Okay.
Right. So like there is signals, and there's so much noise you cannot communicate easily. Brokers used to communicate using symbols, right? True. Or hand signals, right? The same thing when machine is talking to each other, they have their own language.
Okay.
Right? And systems which need to talk to exchange must talk on CTCL or BSE has IML, right? And we send signals to the exchange. That's how the whole transaction happens, right? There is a language in between, and of course the software basically understands that language and talks to each other.
Okay, but the basic discussion that both the exchange and the brokers, and then you have the depositories on the third side, and then you also have the clearing corporation on the fourth side. So that almost makes uh, the basic linguistic ream that much more tougher to understand.
So just imagine like it's like 3-4 different people each speaking different languages.
Yeah.
No, not just languages itself are different. They don't understand each other. True. Right? Because each system will talk to the other system in a very different language. Right? The protocol of the language is basically the vocabulary that they have is different than the other. Right? So just imagine 4-5 people doing business, but no two people talk the other language, right?
Okay, so it is.
Yes. So let's say the broker can talk to the exchange, but the exchange can't talk to the depository. Broker can talk to the depository.
Yeah.
Right. So hence the broker is in between because broker talks both languages.
Right.
Right. So that's how the whole real life system works. Right. Uh, Exchange can't directly go to the depository, or they are both via the broker, etc. So there's a lot of complicated such messaging that's happening, right? Standard protocol as to how you interact, etc., is already given, and that's how on a daily basis, every second, these interactions is happening.
Oh, so all of the complications that you just spoke about, with four people talking different languages and yet finding their synergy is to ensure that the clients trade seamlessly.
Yes.
So that's typically how it's done. So
Yes, and the client is protected as well.
yeah,
So the reason why, let's say, a depository exists is because then the client is not necessarily dependent on only the broker, and there has been in past certain cases where the broker took away the stocks, etc.
true.
So now in real time basis, the broker has to give up those stocks to the depository, etc. So the risk that the customer has end of the day is very less because there is no one party that is if everything was with the one party,
Yeah.
that one party can abscond, right? But when you are having multiple parties,
And he's dependent on the other.
yeah, but just the presence of multiple parties makes a fraud unlikely.
Unlike, I mean, that much more tougher.
Yeah.
And with the volumes and all the checks and balances in place and real time reporting to the exchanges.
Yes.
Yeah.
All of these are hence introduced so that the environment is safer for the customer.
Awesome. Awesome. Since BlinkX attracts retail customers, is high frequency trading possible for retail customers?
So as I mentioned, when we talk about high frequency trading, right, like technology is one thing, of course, deep pockets I mentioned, true. But when we start doing high frequency, even with institutions, what ends up happening is that there is a arms race, right? Like you might have heard, USSR and USA were under an arms race, right? They were creating, yes, nuclear bombs, each, right? Similarly, in HFT, everybody is in an arms race. How quickly they can just shave off that microsecond rule and hence make whatever is there in the business, right? So faster you are, you will be the
Fastest.
yeah, it's the fastest. So winner takes all kind of a scenario, right? So every day, even the HFT players need to keep improving on the technology. So it's not like if once it is done, right? Every day they need to keep investing,
True.
right? And there is no end to it, right? Now, just imagine, I'll take the missile example in a different manner, right? That you want to, you know, create a dent, right? And hence you bring in a missile, right? But you have the budget of, Diwali rocket.
How do you manage both?
Yeah, you can't make a dent with a Diwali rocket where actually you needed a missile, right? So for
That's the gap.
right, there's a big gap, right? For a retail customer, they don't have the deep pockets to put in the market together, right? A retail customer maybe few lakhs is good enough for that person, whereas in HFT you have to have thousands of crores we put. Firstly, that is there, right? Secondly, the arms race that I was talking about, you have to invest in technology, right, and in people, right? The salaries you give to the people, and I guess most people have heard about Jane Street, etc., right? They are giving like what, 4 crores to a IIT fresher, right? If that kind of salary has to be invested,
Oh yeah.
right? You can imagine this is not a play field for
Not for the weak hearted.
and not possible in retail.
Not false being treated. Oh, awesome. I mean, that was a pretty clear stance that you produced. A lot of people talk about APIs and the fact that those rules keep evolving over a period of time. But what's the current stance from technology standpoint, from today maker standpoint? Where does API stand?
So before we come to technology stand by the regulator on API, it's important to understand that API is also a language, right?
Correct.
So what is API, right? So when customers would be able to send orders to the broker without the broker's app or web, right? That's API. Right? Why is it needed? right? That's needed when the customer wants to create some sort of a algorithm to trade.
True.
Now, again, very important is that while HFT also uses algorithms,
Yes, this
right?
right? Yeah.
Uh, and I mentioned HFT may not be a retail play. Algorithm definitely is.
Yes.
Right? Why? So when we talk about the whole algorithmic led journey around capital markets, right? I remember in 2010 when the institutional desks uh, were being moving to algorithms, and from huge desks with so many people, there was a job called jobbers, right?
Yeah.
And then suddenly those were gone, right? Like even in city, I saw one day so many people leaving or asked to leave because algorithms were there, right? uh, Goldman Sachs says that they replace 600 people with 2 people using algorithms, right?
Yeah.
These are not necessarily HFT. Algorithms can be low frequency, right?
Okay.
There are various different categories of algorithms, right? There are, yes, you have arbitrage algorithms also, but low frequency arbitrage, trading algorithms, market neutral algorithms.
Yeah.
You have directional algorithms, which are like TWAP, PWAP, etc.
True.
So many different. You have quant algorithms, right?
Yeah.
So when people say algorithms, most people don't even know what they are really wanting, because it's so vast a field, right? There's like so many different types, right? And many people will spend their life doing just one small piece of algorithm and type of algorithm.
True.
Right? So the customers can use. Now I see now is the time, and actually lot of people have been using already, and lot of customers are very tech savvy. They have been using APIs for running their own algorithms, right? And for a long time this was in gray, right?
Okay.
Whether we were sending orders through algorithm or definitely used APIs, right? Now, whether all the orders sent through APIs were algorithm or not, that was a question.
Yeah. That.
I think one of the things that uh, always we were supposed to do in institutionalities was mark the orders which were algorithmic orders as algorithmic orders. In this whole meantime, what happened was all the orders coming from APIs were not being marked as algorithmic orders. So the exchange and SEBI didn't necessarily understand whether this was actually a human sent order or a algorithm.
Yeah.
So the changes that SEBI is proposing is that all orders through APIs should be considered as an algorithmic order.
Okay. Ready for it. Okay.
Now,
Not necessarily the number of orders per second. That does.
so I'll come to that.
Yeah.
So now the thing is that there were several third-party companies, like brokers were there, and then there's other set of companies that were coming in, tech partners, which were actually selling algorithms. So one is the user who is using algorithm is very tech savvy, right? And another is that people are being sold algorithms when they are not so tech savvy. So there were certain partners as well. Now, what is it that those algorithms do is anybody's guess, right? Because not everybody understands that.
True.
Right? So SEBI wants all these partners to register with SEBI, with exchanges, etc. And so that there is no certain third party who would end up being there are risks to all of this, right?
Absolutely.
While algorithms themselves can go wrong,
Yeah.
despite all that, despite everything, right? There can be certain players who have malintent, and even if the algorithm didn't go wrong,
Yeah. By any design of the algorithm, there could be.
yeah, people can use the whole aspect of algorithm going wrong, and people will say, "Arey, algorithm galat ho gaya, ya tech problem."
True.
Right? So that's another aspect to it, right? So we don't necessarily want that, right? So of course, SEBI and exchanges don't want that, right? So they said, okay, all these players need to be registered. Okay. And the broker need to take more responsibility, right?
Of in terms of scanning the API.
Of everything, right? No, so partner knows it. Yes. So the secondly that the speed, as I mentioned, of how quickly the orders are coming, right? Sometimes when we are not talking about high frequency trading, right? So we are providing a systematic thing for retail, right? Now, if let's say one person has an algorithm which is going haywire, right? You can send maybe 50, 60 orders per once in a second. Right. It can change the course of the market, or maybe it's totally a loop which is going haywire, right? Absolutely. There was a company in US, Knight Capital, which because of one mistake in an algorithm lost $400 million in 30 minutes, and that entire company went bankrupt, obviously, right? So, I mean, that kind of size of companies can go bankrupt
With one small,
with small error. So, of course, retail customers need to be
all that more careful.
more careful, right? So, to safeguard, right, uh, there's this whole aspect about how many orders per second, right? So, mostly for um, a very savvy customer, a technology savvy customer who is not using any of these partners. If you're using the partners, whether you are 1 orders per second or more or 10 orders or
Yeah, it's complete.
yeah, it still needs to go through and will be considered algo. But if let's say there is no technology partner and you are using API directly with the broker, right? So you are savvy person.
Right. And I write my own algos. Right?
Yes, it's so you are taking your responsibility. There also, till 10 orders per second throttle, you may not necessarily need to go and explain what your algo does to the exchange and get a approval and all. But if your algo sends orders beyond 10 orders per second, then you will need to get approvals, etc., because that can change a lot of things in the market.
Even in terms of the definition of what me as a retail customer is. Okay, understood. So that's the kind of threshold that you had. Awesome, awesome. One last question before we move to rapid fire, Anshuman, is AI ka zamana hai. Everybody talks AI and artificial stuff like that. So quick one, your understanding or interpretation of AI in the entire trading ecosystem of capital markets.
See, like AI is also another computer program. Okay. So while when now we say AI because of OpenAI, etc., so the AI is synonymous with Gen AI and large language models. Okay. But AI is a larger word, right? AI has machine learning, AI has deep learning. There are so many different things around AI, right? Lot of people use deep learning, machine learning uh, with a lot of data to create quant models. Okay. And the quant models then, so basically you are using a lot of previous market data to find patterns. Okay. AI is good for finding patterns. True. Right? Again, this is what a lot of quants do, and for that you need lot of investment, big data, Hadoop, etc. True, right? So I've done this in my previous jobs, but that's quite a bit of investment on that end, right? But people do it, right? Nowadays what people think is, oh, I will ask Chat GPT to predict, right?
They just replace Google or any other search engine,
right? So it's a very simplistic approach on that. But even with all those technology, etc., right, with the more sophisticated technology, etc., right, there also the one thing that you cannot get rid of is your ownership, right? So in a sense wherein, let's say, a technology person would come and say, okay, there is this pattern that I can see, right? The trader will put some XYZ money on that.
correct?
Right? Generally what happens is they go slowly and they lose some, win some, and figure out whether it is good or not. So there is a whole aspect of back testing with old data. True. All of that. But even with all the back testing, markets are so are such that no old data can probably predict high neutral rates. I think if I remember Markov principle or something, right, wherein you cannot uh, go with the old data and guarantee a return. And
Absolutely.
right now, so somebody is taking a call that this is good or bad, right, and just on past data or conviction, right, and it's monitoring, right. Also understand that a algo strategy, whichever algo strategy, whether Gen AI, non-Gen AI, simple algo, any and every algo strategy also has a market, in the market has a shelf life.
Okay.
Because when everybody gets to use the strategy, because very soon people know, then that strategy fails to actually give.
Given some mass strategy.
Yeah. So as soon as you get to retail kind of rate, things are very mass, then the juice that is there to get from
Then it reduces, right? Yeah.
and with time it reduces. So everything has a shelf life, right?
With time and more adoption. Yeah.
Right. So doing all of that, somebody is figuring out, okay, is it worth it or not, right? Whereas if you let AI take that call, right, you and not take ownership, right, ultimately पैसा किसका जाएगा?
Customer रहेगा.
Customer का जाएगा. So if the customer is taking that call, the customer is inherently taking that ownership.
Absolutely.
Right. In many places, AI etc. haven't been very successful because it was not their own money.
Correct.
Right. So the trader would then say, "Oh, technology वाले ने गलती कर दी," but then it
comes back to harm's way. Yeah.
right. So what happens is nobody is taking the ownership and it doesn't fly because
Okay.
you understand that to get or get to a point where you are making money in the market, you will yourself go through a learning process.
Absolutely.
Right. And the learning process involves losing users. Right.
Absolutely.
If you are automating that, there is a high chance that you will lose much more money, much more rapidly.
More so because you're not taking that ownership.
Yes. And the system is also faster.
Absolutely.
Right. A trader will go and also have, okay, today this is the limit I can lose. Right. If you don't define properly in the machine is very quickly.
Absolutely.
You know, if a machine is learning quicker, machine is losing money also quicker.
Absolutely. Absolutely.
Right. So understand that these things need to be owned. Right. So you can do anything with the machine, but if you don't own the outcome,
then there is only so much that you can control the outcome. So the age-old principle of understanding the risk, understanding the capital that you want to, planning your trade, all of that, despite whatever age that we are in, I think those things will always remain relevant.
fundamentally having discipline. So multiple times what happens is people will say, okay, my model says X, but I can see Y. So if you start intervening, maybe you're again going outside, right? So the whole patience of, okay, how much do I sit where the model is maybe correct or not, or maybe the model is totally haywire and you have more trust in the model.
What is the threshold of pain that I'm willing to bear?
Yes.
Right?
So this decisiveness on whether I go with the model or not
It's beyond on us.
Yes, this will always remain with us and human learning and not machine learning.
Right? A lot of artificial intelligence, but the core still, yes, remains the human judgment.
Yes, and to be honest, the LLMs etc. are not necessarily at least a good model or a good system for trading unless it is trained specifically around market data etc. Which will come. So right now the large language models are more trained from a English perspective.
Okay.
Or creating an image perspective.
And
right. Unless you train a model specifically on market data etc., it won't be worth it, right? So whoever is using just chat GPT or perplexity etc. should use it on their own risk. Training a model is $1 billion
journey.
Yeah. And a lot of companies are not now doing it who have that.
Correct.
Right. But do you think they will give it to you for free?
Absolutely not.
Right.
Absolutely. Oh, wow. Interesting. So, I mean, you actually reorganized a lot of my own understanding in terms of AI, saying the core is still remaining to be the human intelligence and the conviction and building over the models, and more importantly, having the discipline. I guess that's the core of. Amazing, Anshuman. So I'll just move to the last round of Bolt. Just a quick 2-question rapid fire. And your answers could be without thinking, right? So first thing that you check when the market opens.
Is my app running? Is market data coming? That's one of the things that
Especially radiogram technology kind of, yeah, CTO news client, yes. What's the biggest misconception about HFT?
as I mentioned, in retail, people feel that I can do HFT using retail app.
That's the key. Yeah. Because of all the regions, as you spoke about the complexity, the investments, the split second actions,
And we are in millisecond, they are nanosecond.
nanoseconds. So yeah. Wow, that was an interesting conversation with you, Anshuman. A lot of those typical jargons that we also get exposed to in our conversations when we interact with people outside on HFTs and AIs and role of retail and stuff like that was pretty interesting, and I hope our audience also finds it as interesting. Please write your comments and ask us what other topics that you need, and we're more than be happy to share it with you on Bold by BlinkX. And thank you so much, Anshuman, for being part of the show, and we really enjoyed it having you on. So thank you so much. So thank you.
Investments in securities markets are subject to market risk. Read all the related documents carefully before investing.